And what is up, guys? It's Ted here with your favorite Smart Money podcast, Bodies and Wigs. I don't know about all excitement about favorite, but um, it is a podcast about smart money. Um, and what that means is basically, that means that anybody that has the means, the ability to control the charts in your trading ventures, probably has the ability to do so. And it's all about taking a look at from their perspective, not from the retail perspective, which is, well, if it does this and it follows a trend line, then we should trade along that trend line until the trend line stops. Or, hey, there's some double lows. It looks like that means there is a perfect support that nothing can break that support. So as soon as it gets down to that area again, we should go along because nothing can break that support again. Those are far from realistic because that's what smart money wants you to think. They want you to think that way because one, if you do go along with a trend line and it hits the trend again and you buy with it and they see a lot of volume, guess what they're going to do? They're going to go against it. They're going to sell it and then they're going to short it to hedge their sell because they have probably way more of the asset than you do. Let's say Bitcoin, for example. And then, of course, it starts falling. It starts shorting. They make money, and then it gets down to a price to where they want to start buying up again, and then they buy it up at a discount. And this is true for every single chart. So, if you're still in that retail frame of mind, I ask that you open up a little bit, and hopefully that this can help you with that. So, uh, we're just gonna do one chart here really quick for right now, and maybe I'll do some more later on tonight. But right now, I just wanted to start off and go back to Bitcoin because I know we've been revisiting this a lot because it's been consolidating, it's staying in one area, everybody's wondering what it's doing. I still have my call and I'm sticking with it, and I'm going to try to show some evidence for that. So, but before all else, of course, if you know somebody that needs this kind of information, you like this channel, maybe you just like this video only. What I'd like you to do is go ahead and hit that share button, hit that subscribe button, hit that like button, whatever you got to do to help out this channel, to help out me, help out yourself. Especially in times like these when things are questionable, and I think things aren't really so questionable. So, all right, so let's go ahead and hit the chart. So here we are looking at old good old Bitcoin on the daily. I like looking at the daily first. Well, first of all, it kind of gives you a bigger perspective of things, what's been happening. The big drop down here back in August. What caused the big drop down? Well, more than likely it was the large, I wouldn't say large, but there was, I think, either a weekly or a monthly fair value gap around that area. Yeah, well, it says weekly over here. I think there may have been a smaller weekly, but it had already been dropped down into that, came back up, maybe not mitigated it all the way, drops down again back into that same area. So, what now? Well, in what we call a market maker buyer sell model, you will see areas like this, right? You'll have like a boxed out area to where it consolidates, another boxed out area, and then another boxed out area, and then this is what we would call a sell program. Sell program meaning that even though it starts somewhere to where it would look like a buy, it actually is a sell. So it starts somewhere around here. They push it up, make it seem like it's going to buy, and then it drops lower than the original price to where you would think it would start buying from. And that also that falls into what we call the monthly fair value gap. So if you watch my videos in the past, we've looked at the monthly. There is basically in the month of, I think it's either December or January of 20, or yeah, I think somewhere around there. Well, you'll see whenever Bitcoin explodes, December or January, around that time. And the 2 months on the opposite sides, basically, the wicks don't touch, which leaves an imbalance, and that's what price goes towards. Price goes towards imbalances and liquidity. Liquidity is also another thing that I was talking about earlier when I said something about, hey, there's two equal lows. Buy at those lows because retail tells us to do. Again, that's another farce thing about retail trading, because two equal lows means that there is liquidity underneath that, meaning that's where everybody puts their buy limits, meaning that's where smart money would take all their money and go short and then sell all their assets. Because why? Because you have all your money sitting there as far going long, and everybody that has more control over the charts knows that they can push it down, get it lower, take you out, take your money if you're trading futures or trading options. Some not really options in Bitcoin, but other things. But um, and then it'll get lower to a point to where they want to buy it back up. So my original idea was to, and I started a little bit earlier. I started buying right around above this 4-hour fair value gap. Um, let's see, I don't even know if I can click anywhere and it'll show up. Uh, there we go. Yeah, somewhere around 19,200 is where I wanted to enter in on the short. I believe I had my original stop loss right above this 4-hour gap, or maybe even right around the middle of where this orange line is, around the 21 500. I moved it up, and the reason I moved it up is because ever since then, whenever it did kind of shoot up, it did create a daily fair value gap right in this zone, which means price is possible to go back up into that area. Um, and also, I don't know if did I move something on accident? I don't think I did. No, okay. Um, and then also there's another daily fair value gap way up here. However, I should probably move that down because if it gets above this break of structure right here, where this high is, and it closes above that, more than likely we are going to see more bullishness um, before it comes back down. But I do believe it will come back down to this area and get into this monthly fair value gap. Well, that moves something, that's for sure. Um, so I am going to move this down to about here. So that would take that to about 25,300. That would be the highest I would go. And I would definitely be taking profit. I would look toward the middle of the monthly fair value gap, which is this green line right here, which is somewhere around 15,600, 14,800, depending on which chart you're looking at. This one is 15,810. So, and that's right around an institutional level, right? And an institutional level usually ends in the 0 hundreds, 200s, 500s, or 800s. And when it gets near those, you should expect it to cross that line and probably go a couple hundred more, depending. If it's around the 500 line, usually about 3 or 400 more. 8 or 2, maybe 1 or 200 more. It's just a long, convoluted process that I've learned through my mentorship, and you'll just have sometimes you'll see it yourself, um, especially here. When it crossed the 20,000, going back up, it did, of course, take itself back up almost to 25, and that was way, way more than I expected. But that's just the truth. It came back down. And this is where right on where it happened. After it ran over the 25, or actually right when it after it ran over the 20, right around in here, it jumps up really high, almost to 25,000. So even here, it jumped up above the 20. It got to about the 22. That's what I was expecting. Falls back down into a 4-hour fair value gap. Jumps above the 20 again. It jumps really, really high above the 20. And then pulls back. And then kind of stays, in consolidation around through here. But then after it falls, now we can see it kind of consolidating around this area just below kind of where it was consolidating before. So, that being said, what I believe is possible, and now I'm in the green as to where